I'll try to keep it less than 15 because I know it's been a long day, but a great day, as Marty always puts these together. Thank you for giving me the opportunity to speak. So yeah, crypto. I mean, there's a lot going on, and I'll give an overview. And I know Tim, and Tim's a huge proponent, and eventually he'll be right. Just a question of timing at the end of the day. I was in. I have a couple of slides I'm going to share with everyone in a moment in regards to just some trading trends, but. I was in the UK last week. I was in London, having meetings all over London, Canary Wharf. But I also spoke at the AIM conference last week that had a heavy crypto leaning. Basically regulation, the ugly issue of regulation came up. And the view is that the U.S. is way behind everybody else, as we know. And Gensler spoke today, and I'll touch upon that as well. The UAE is making a huge push through free enterprise zone. So, hey, Marty, there's some background noise. I don't know if anybody can hear me.
Yeah, somebody just came in.
Okay.
And now the door closed, so now it's going away.
Oh, okay, good. Thank you. So free enterprise zone in the UAE, and I was out there about a month ago in Abu Dhabi and Dubai, and there's a lot of serious work going on out there in regards to crypto exchanges, crypto firms with very, light may be the wrong word, but let's say crypto friendly. So there's a view that the crypto world is definitely going to be moving out of the US. Coinbase came out today and said, they're considering operating outside the U.S. Binance has been cited by the CFTC.
You're already operating.
So now Binance is probably looking at winding down Binance US, even though Binance proper, the holding company was cited, having a subsidiary here in the U.S. just puts Binance at more risk. So that most likely will occur. And we're just hearing more and more that that individuals and companies are considering moving out of the U.S. completely, ring fencing it, and that that might be a trend. Now, Oasis Pro, my company, we're a fintech company. We're based here in the U.S. We also have a Swiss subsidiary. We're opening other subsidiaries overseas, but we're going to stay here. We're on the regulated compliance side, so we're digital securities. As they move ahead, similar to what Gensler is focused on at this point in time. But there is a movement outside the U.S., but I certainly believe, based on my experiences, that the U.S. is resilient. And when the U.S. eventually catches up or solidifies the clarity, which a lot of legislators and lobbyists and others, and I would agree with much of it, there's just too much grayness here in the U.S., and the regulation by enforcement is a real problem. But the world of crypto is moving outside the US. Asia is big. I think the UAE is the next big market. There's legislation for stable coins that'll be voted on Thursday in the EU. It's called MiCA. That's the MICA. You could look it up, and that's basically to regulate stable coins, which the US has not done yet. And with clear set of patterns. It's not the utopia a lot of crypto enthusiasts were hoping for, but it's at least clarity and regulation. The vote is expected to be positive on Thursday and then enacted by June of this year. So you'll see some movement to the EU, but I do think the UAE is really where the world's going to grow exponentially until the US catches up. The other areas that I would talk about is today, Gensler was in front of the House Services Committee. And there's going to be a lot of news about it. He was attacked quite hard by McHenry, who is the chairman of the committee, and as well as the Republicans, in regards to his regulation by enforcement, taking something along the lines of 50 plus actions, where his predecessors in their first 18 months to 20 months were about half, that wasn't providing clarity. Obviously, he defended himself. At the end of the day, it really was very partisan. But you're going to say the CoinDesks of the world, all these articles in crypto are going to say how heavy he got hit. On the other end of the coin, he did ask for more resources, and he didn't feel that he needed more authority, nor did he feel that he needed more legislation, which is a move by him, because when he first became chairman, he asked for more powers. And he's now stating that he has all the powers or authority that he needs to move forward. So there's a lot of clouds ahead. Crypto is still growing. Volumes are down, but I've said this before. Echoing Tim earlier, Bitcoin is here to stay. I think ETH is here to stay. I think specifically staking ETH, is here to stay. And there are a lot of opportunities there. And I think that what we're going to find is that, this is just my opinion, that, despite all this pressure coming on Gensler, he's going to do what he does. And that we have to get accustomed to this. But the US, again, largest market in the world, everyone wants to be here. Those fleeing, as soon as the US market opens up, it could be 5 years, they're going to come back. The large institutions who we work with, quite often, we're really focused on the money center banks, large institutions, the large investment banks, and developing relationships with them for digital securities, the large custodians. They're moving into this area, even though you don't see it in the news heavily. They are investing a lot of money in terms of personnel and tech, and we're part of that. It's just really exciting in regards to what's happening on that front. And they're preparing for the future when regulation and clarity and the guardrails are firmly in place here in the US. And again, resilient US, within 5 to 10 years, when the US, everybody's going to come back. And maybe the UAE will become the second market in the world at that point in time. And it's very exciting there. There's a lot going on, but that's just, this is the hand we've been dealt here in the US, and you either need to embrace it or, leave the US. There is some concern that even leaving the US, if you're a US citizen and you're living here, and that you're working for an offshore entity, that you might find yourself targeted as well. So it's not just about the company's domicile any longer. It may be, hitting much closer to home. Now, with that, I just want to talk a little about Bitcoin and ETH and answer any questions you might have. But from a crypto standpoint, what I'd say, in the past I've spoken, and we've talked about other coins. I think I've been consistent in saying that Bitcoin and ETH are really the recommendations over time. Now, with other coins or tokens out there, there's this clarity issue, especially here in the US, as to whether they're securities. And I have a view on maybe a handful, but beyond maybe an initial 10 to 15, maybe on the outside 20. If you look at the SEC regs and what's called the Howey test as to if something is a security or not, most likely you're looking at the overwhelming majority of tokens to be securities here in the US, based on what Gensler has shared with us. So I think focusing on Bitcoin and ETH, you're going to do quite well. Just some recent trends, and I hope I can do this correctly. Here we go. So can you see this chart?
Yeah, looks good.
Okay, great. So this is really interesting. So this is just BTC. It's about 30,000 today. And but just something to share with the audience here is market makers are very bullish up to 31,500. And because they have, what you can see is they have option protections up there. The retail is buying any dips. Now, the volume is still thin. The volume has been thin for some time now. I would say it started over the summer and it's continued, but it's really starting to come back. And that's a really positive sign for the industry. Now, retail buying is buying the dip. So you see these blue marks here and here, as well as here. Now, that's primarily Asia buying. So here in this area, that's primarily US and Europe. So, it trades kind of flat, with some pops. But the big buying has really been retail out of Asia. And you'll see that here. I hope you can see my mouse here and here. And these are big moves, $1,000 moves when, the US is, it's late in the day here or early morning. In Asia, they've been buying, and that's really what's been driving this market. On the ETH side, last week, there was this fork called Chapella or Shanghai, and that was the catalyst for ETH breaking through 2,000. Now, what Chapella did is, I mentioned staked ETH before. Staked ETH is before you held ETH, and there were ways to earn a yield on it. But with staked ETH, which is proof of stake, which occurred about a year ago, you basically put up your ETH, and what it's done is reduce the costs of all the mining and in regards to ETH and the smart contracts, and tremendously, because there were arguments. Now, Bitcoin doesn't have that, but ETH certainly has. The costs are reduced 100-fold. And but now you can actually get a yield, a return, like miners have with Bitcoin and some other tokens. You can actually get a yield off of your ETH. Now, that all started a couple of years ago, but there was no way to cash it in, to liquidate it. Once you put the staked ETH up, it was very experimental, and the idea was when Shanghai would occur, and the thought process was a year to 5 years in regards to Shanghai or Chapella actually occurring. Well, it happened last week, and that was the catalyst, as I said earlier, for ETH to break over 2,000. Again, there's lots of buying interest. Whenever it dips below 2,000, it's again primarily retail, and it's what's, in our opinion, been buoying Bitcoin to stay above 30,000. And then lastly, this last chart is basically comparing BTC, Bitcoin, to ETH. And what you'll see here is that the exchange between the two has moved in the favor of ETH. In fact, the trade that many institutions were doing in the last couple of weeks has been selling Bitcoin and buying ETH, and it's turned into a fantastic trade, as ETH has outperformed Bitcoin. Now, what we expect is this to continue. And, the mark on the Bitcoin side for us is about 35,000. Again, the institutions aren't coming in. It's primarily retail interest. But what the market makers are very active. They're providing the volume. And as the price goes up, whatever holdings of Bitcoin they have, they're selling into the market. That's what's happening right now. Now, interestingly enough, when Bitcoin rallied to 60, 65,000, it was the same type of trend at about this level that allowed Bitcoin, that was supporting Bitcoin at that point in time. And again, ETH at that time was more following Bitcoin because this move to proof of stake hadn't occurred yet with ETH and Ethereum. This movement to liquidating staked ETH hadn't occurred yet. That was Shanghai Chapella last week. So ETH has really garnered a lot of strength. And as I've shared, for those of you who've seen me speak at previous IvyFONs with Marty, ETH was really following Bitcoin in the past. Rising tide lifts all boats. Now, I think long term we think ETH's going to be the winner. We think Bitcoin's going to be a winner. 500,000 maybe. or $1 million, according to Tim Draper. But we think ETH is going to be very strong. And by having a position in both and, really not trying to time the market, because it's just a very, the volumes, retail buying, there's not much quantifiable data as to why the trading is where it is, where the volume is. But as a diversification methodology for family offices or individuals, Bitcoin and ETH are definite, in our opinion, asset classes of crypto, and are going to be the leaders. And so there should be liquidity, continue, and would be a very interesting diversification opportunity, maybe 5% of someone's portfolio, but not to time the market. Really, I mean, this is a really a truly long-term play. And I'll just pause there, if that's okay, Marty. And
Pat, we have a question from the audience. We have a question.
Hi, Pat. With respect to the Winklevoss brothers and Gemini, who just, I guess, put 100 million into their own Gemini to keep it afloat, do you see them doing anything like a wow, that they're going to react somehow in a way that the market doesn't expect, to be creative and leaders and thinkers in this whole space? Because obviously they're in big trouble. And I don't think they want to see Gemini go down.
Right. I agree with you. And we've lost Celsius, we've lost FTX. I mean, we've lost a number of groups. Kraken is basically winding down operations here in the US, right? And it's occurring. So I don't know about a wow, but I do agree that they want to see Gemini succeed. I know Gemini is doing a lot overseas and is a major institution for most of the hedge funds globally. So we're hoping that they'll, survive as well. It's a big commitment from them, and we need that in this industry to continue. But again, outside the U.S., in regards to some of our interactions with some of our partners, Gemini's name comes up in a positive light.
Any thoughts on de-dollarization and the impact on crypto?
It's a long way off. So I think the debates are going to go, for a long period of time. Just as background, the whole approach to the digital dollar, et cetera, really gained movement because of China and the perceived threat to the US dollar as the reserve currency of the world. I think that's lessened a bit. I think geopolitics has taken over much more so, which has had an impact on capital markets and trade flows. So I think that, will it eventually get here? The answer is yes. Certain countries have already done it or in beta. But it's, I don't see, I think stable coins, which is what a dollar could really impact, a digital dollar, all have their uses. And by the way, I think 10 or 15 new stable coins globally, not here in the US, have been announced in the last couple of months. So they're not stopping. And this MiCA regulation out of the EU is going to spawn even more stable coins. So I think stable coins have a role in the capital markets and trade and payment sector. And obviously fiat digitized does as well.
And so the last question of the day is, can you talk, you had talked about the need for market makers in the tokenization space, et cetera. How is that going? Are you seeing more people coming to people like you saying, hey, we did this issuance, but nobody's buying on a secondary markets? Can you talk about that structure and how you're approaching it, and whether you're seeing, demand go up for that?
Sure. Well, that's digital securities, not crypto, in regards to...
Absolutely. Yes.
So we're moving over to the regulated and compliance market. That you need a two-sided market. And we're still in the nascent stages of digital securities here in the US. There are digital securities in Asia and some other parts of the world. There's a question about, are market makers real? how strong the compliance is there front running, et cetera, all those issues. So I don't look at other what's occurred outside the US as really a barometer of what'll happen here. There's just a lot of questions. You can track wallets, et cetera, and there may be there may be some funky, you know, trading going on. But here in the US, it's still a problem. What we're doing is, you know, we're speaking to all the largest market makers and actually some smaller ones too. You know, Coinbase's comment actually is along the lines of what their statement that they may move out of the US is somewhat consistent with what we're hearing. So there are certain tokens that trade high volumes like Compound, Filecoin, and some others. And if Coinbase exits the US market and they're deemed securities, moving into an ATS, which is one of our subsidiaries under Oasis Pro Markets, can be it could be, we can do atomic swaps, which means we can do stable coin for digital security transactions, very similar to what you can do on Coinbase. So we think that the market makers will flock to ATSs and exchanges very quickly once there's that clarity and these tokens become digital securities, because they do trade in high volumes relative to, you know, some others. So I don't call it a problem. What I see it as just the evolution of this market. And
I guess the question is Coinbase analogous to Silicon Valley Bank if it leaves? And does that make a great opportunity for people like you?
Yeah, well, I would say it's been a fantastic opportunity for the regulated, the TradFi approach to this whole blockchain technology, and that's what we're all about.
Fantastic. Hey, Pat, how do people reach you?
OasisProMarkets.com. My email is pat@OasisProMarkets.com. Thomas Rubio, who's a member of my team on our biz dev side, will be at dinner tonight. So
Fantastic.
I apologize I can't be there, but Thomas will be there. And we've got about 24 people or thereabouts. We're growing, and we'd love to hop on a call with you.
Fantastic.
Audience. Yeah.
Tell Tom to bring a lot of cards.
Yeah, all right. He's already there.
Pat, thanks so much. It's always great to have you speak.
Awesome. I appreciate it, Marty. Great seeing you.
Thanks.
Everybody.